Hi, welcome back to our channel. I trust that you guys have been healthy, and taking all sorts of precaution to maintain your health. Videos that we have uploaded earlier, I hope that it has been beneficial for you guys and you watch it. For those who are new to us, hi, my name is Marcus. Today I'm going to share with you something about the market condition that has been happening the last few weeks. Okay, market has been pretty volatile. Okay, and over dinner last weekend with some friends, and they've been asking me questions like this. Hey Marcus, market has been pretty volatile, hasn't it? One moment it's going up, one moment it's going down. How does it affect you? Right? Is it scary to trade in such market condition? Do you get good trades out of it? Well, I can assure you that we do have many good trades to take. In fact, for day traders like us, we prefer to have volatility in the market. Well, we do not want to have very great volatility, but we want to have enough volatility to enable us to capture the turns, the ups and downs. Okay, let me just show you a couple of charts which was what happened last week. Okay, this is one of them. Okay, on the 24th of February, okay, within a 2-hour time span, we had 12 winning trades and 0 losing trades. Of course, these are all based on the parameters that we have set, and traders have been taking it accordingly. Another day, on the 26th of February, there were 13 winners. Yes, okay, we do have bad trades along the way. There were 2 losing trades. So altogether 15 entries, 13 were good, 2 were bad. Some people did ask, are your traders able to mirror, or are they able to take the same kind of trades? Yes, they do. Before I go on to show you some of the trades which our members have taken, let me just explain a little bit about what day trading is about. Okay, day trading, we do not hold our positions overnight. It means when the market has stopped, we do not have any open exposure out there. In fact, most of our trades last for very short time duration. Usually within 5 to 10 minutes, we are out of a position. If you just look at the charts here, okay, day trading allows us to be very flexible, okay, in catching the turns on the market. Okay, so for example, if over here market has been going up, okay, we are able to take trades, long trades along the way. Okay, as the market starts to turn down, as it moves down this way, okay, we are able to capture short trades along the way as well. All right, so because our trades last very shortly, we are in and out of position fast, allowing us to quickly capitalize on the next change in direction to take trades. Okay, now let me show you some of the trades which our members have taken. This is one of them. Okay, this is a gentleman from Australia. Okay, he has taken a trade, okay, a long trade along the way, okay, and gotten his profit of 2.5 points. This is another trade that was taken recently. Okay, AOS. Oh, I showed you this earlier on, sorry. Okay, and this is another trade. Okay, market has been going up, okay, but he was able to capture an opportunity to take a short trade here, okay, when the market changed direction. Okay. Following the market trend, an LS trade. Okay, this is also following the market trend to take a short trade here, okay, and out very quickly as well. This trade probably lasts less than 5 minutes. So many of our members actually prefer to trade when the market is volatile, because they do not have to wait for a long time to get their trades in, and the duration of their trade is actually very short. So as I assured my friends last weekend that, you know, volatile market is a boom to us, not a thing to frighten us off, and I explained to them why. Okay, firstly, as day traders, okay, we have the flexibility to take trades as market turns. When the market condition change, whether it's going up or going down, we can quickly take advantage of it, and we are able to do this because our trades are short duration. Okay, duration of our trade is very short. Like as mentioned earlier on, within 5 to 10 minutes, we are usually out of a position. Okay, and this actually frees up the capital for us. Imagine if we were to be in a trade for a long time. Okay, if we spot another opportunity, we haven't gotten out of an earlier trade, we might not have enough capital to take another trade, right? So by getting in and getting out very quickly, it frees up our capital. It allows us to look for opportunities to take a second trade, a third trade, a fourth trade, so on and so forth. Okay. We are not caught up in swings. Okay, we are not taking a trade and let our profits run for many points. But if we can set a fixed target, okay, in and out fast, when we are taking a long trade, for example, if the market suddenly decides to swing downwards before we hit our profit target, we are not caught in that kind of position. All right, because like I said, we don't attempt to let our profit run for as much as possible, okay, but to take quick profit and get out very quickly, safeguarding our investment and our trades. Okay, I hope that you have enjoyed this video. Okay, and if you wish to find out more, okay, leave a comment at the section below to let us know what sort of topics would interest you. Click on the subscribe button, click on the notification button so that you'll be notified as new videos are being posted up. Thank you, stay safe.